faster than you can assemble and buy and lock in, you might be losing on every trade. And what could have been happening, and this is the speculation, is that while the shares were in the $20, $30, $40 range, they were doing this, and they were easily able to pennies and nickels and whatever. But when the stock went from 40 to 80 in like one day, and then 80 to 120, and they were getting millions of buyers, they were shorting stock. They began to think, well, you know, I mean, come on. It was $4 to $5 for years. It got to 10, which is cute and all, to quote Lorraine Banks from Back to the Future. He's cute and all. But when it took off, they were shorting stock, thinking, well, this is temporary, and they'll just come back and we'll buy it back and we'll be fine. And when the shares got to 80 to 120 to 200 to 250 to 325, I mean, Robinhood was theoretically short a ton of stock. And I'm missing a word in front of the word ton. They were short a blank ton of stock, big ton. Megaton. That's what it was. They were short a megaton of shares as it was going up. And they were using house money to cover the short, honoring the buys for their customers. And then the customers were selling, and they were honoring the sales, but they were carrying a short position. And maybe, quote unquote, is that why Robinhood had to come up with $4 billion in 2 days to cover restrict anyone from buying stock? Why couldn't you buy GameStop through Robinhood when it was $400 a share? You couldn't buy it at $350, you couldn't buy it at $300, you couldn't buy it at $250. It went all the way down to $112, $125 one day, bounced back to the 200 range and went back down again. You couldn't buy it for the longest time. And then when you could buy it, they let you buy one share. Then the next day you could buy 2 shares. And the next day you could buy 5 shares. It took a week, 10 days? Why would that be? And now maybe we know. Maybe now we've put it together. It takes a while to come out. Maybe someone talked to someone at a bar one night and said, well, I'll tell you what happened. Oh, the office is going crazy. We were just going nuts myself. How in God's green earth can this company go public? How can any brokerage firm sponsor this deal? Why would any investor want to invest in this outfit? Now, I will say this, just again, to throw it out there to all of you. I want to give you as many angles as I can on this. I'm not the judge here. I'm just reporting to you what I interpret is happening in a plain English kind of way. It's most likely other firms could have been doing exactly the same thing. That might be standard industry practice, that a lot of firms out there with their computer systems fill their customers' orders and then they deal with the actual trade later. Because most of the time, like Apple, it moves a couple of dollars a day either way. Or like IBM, it might move $1.50 from high to low. And you put an order in for IBM, you're filled. You put an order in for Amazon, you're filled. No problem. They don't have any issues, no problems to handle your trade, to get you covered. You have nothing to worry about. It could well be that for the convenience of their customers, with their own cash, and they got caught. They got caught with their pants down, and they got caught violently with their pants. I mean, they were really caught short with millions of shares. They didn't think they'd be short in such a hurry, where the stock just took off on them. They had no way of thinking that the stock would go from 60, 80 to 400 in 3 trading days. No one did. No one. I mean, the dreamers and the hopers and the aspirationers, yeah, sure. But on the street, at the trading desk level and in management level, GameStop going to $500 a share on a pre-market trade in a week from 40. Come on, get real. I mean, that's the attitude. We're now at 214.29. There are people out there going, this is going to 5,000 a share. And there are people on Wall Street going, come on, what are you talking about? There are other people on Wall Street going, well, it kind of happened before. It went from 20 to 500. It could go to 200 to 5,000. Same thing. It's just in proportion. It can happen. If a brokerage house is shorting against this position, they were, as I was saying to you yesterday, and I've been saying to you every day, 3 weeks ago yesterday, could have been 50 million shares sold at $49.99 a share, so it wouldn't go over $50, and it went over anyway. Those 50 million that were sold, Armageddon is tomorrow, theoretically. Tomorrow is Armageddon. Have these guys covered in the meantime? Have they solved their problem? I would hope so. I would think they would have, but maybe there's still a bunch of stock that hasn't been solved. I don't know. Who actually sold the stock short? I don't know. Did Robinhood back then, when the stock was 49, and all of you who were watching me, a bunch of you were trying to buy this stock. You're buying it at $49.99 all afternoon, and you got a bunch of it. And then it broke out. And you're all happy. It went to 55 and 60, and one went to 91 that day. Were you buying it from a shorter that was a brokerage house? That's an undeclared short, and failure to deliver, and on and on and on it goes. And they were bringing money. They brought the money to the clearinghouse, and they covered the margin on it. It went to 348. A week and a bit ago, at 348, they were down 7 times their money. Was Robinhood again underwater by $2 or $3 or $4 billion? But they didn't get a call this time because they have the money in the bank to handle it. Would it have been possible? And I'm just throwing this out there. These are theoretical what ifs. Do you think that it's possible that maybe a brokerage house attacked the stock when it was 348 a share and drove it down with market sell orders internally using house money to get it down to 172, and then ultimately it came to 280, settled at 260, and then a week later it's now 214, and they don't have a $348 a share problem right now. They have a $214 a share problem, and they're still upside down on the whole enchilada that they got involved with again, but they certainly aren't in trouble like they would have been at 348, and it could have gone to 448 and 540. I mean, the stock was on a roll, wasn't it? Could they have put the brakes on this movement temporarily by dumping stock, more shorting, undeclared, and just putting up the margin to cover everything? Could Citadel been involved in any way in any of this with a $60 billion fundraising deal they just did a few days ago? Is that part of this? People are asking me, Bruce, do you think the $60 billion they raised is covering their butts on the GameStop redo all over again? That they're now covered to 500 a share. They're all the way up to, they're now covered to that. And they're trying to keep this thing from going anywhere by just slamming any positive momentum on this stock. They're not going to let it happen. They're going to let it go up $20, and then they're going to hit it, and they're going to try to retard the movement on it because they have 60 billion borrowed reasons for this, and all their pals and clients who are short all over the street this stock are all doing the same thing because it's their survival on the line. Are we talking about 10 or 20 or 30 or 40 hedge funds out there that could be technically maybe not ruined, but badly damaged if this stock went to 500, 800, 1,000 a share? Are we talking about a $100 billion problem, a $200 billion problem? I remember, we're talking about the possibility of 200 million shares or more that are floating around out there, where a company of that magnitude, that if the shares reached $1,000 a share, it's a $700 billion problem. How many firms are on the hook? Citadel raised 60 billion. They didn't raise 2 trillion. So I do not know what to make of all of this. All I can tell you is this morning it's at 214.29. And the volume right now, I see it now at 210 on my phone with 214 over here. So maybe my machine is behind. 210 over here. Volume 1.4 million. There's no volume. Restricting the buys of GameStop. Do any of you? I'm asking all of my viewers. Let me know if any of you are encountering any problems where you're trying to buy stock of GameStop today or lately. Have any of you been in any issues with having any issues with your broker? They won't let you do it. I'm kind of curious if there are entities out there who are restricting buying access to GameStop because of the very nature of 5 million shares of buying power could pop this thing to $400 a share. I'm wondering, is that? I just want to know. I really wonder. I also wonder. There are hedge funds out there, and there are industry specialists out there who know way more than I do, have much more access to information than I'll ever have. Are there senior people in Wall Street or connected to Wall Street that know just how bad this problem is with failure to deliver, not only with GameStop, but across the entire spectrum of the market? And they also know that if they were to force the issue on a stock like GameStop and a few other select securities, where they were to come in there with house money, client house money, to buy up whatever stock they can get their hands on. In other words, to buy it as aggressively as we saw selling lately, where the stock would drop $100 in 20 minutes. Could there be buying that pops this $100 in 20 minutes with 5 trading halts, and then pops it another $100 again, day in and day out? Are there people out there who know that if they did that, if they allowed that to happen with their clients in some kind of an organized fashion, despite Congress's, outrage, do they know that they might cause a cataclysmic wave of bankruptcies or major liquidation problems with all kinds of their trading partners? Because after all, if you've watched the movie Margin Call, at the end of the movie, the manager hauls in all of his sales reps that are left because everyone else has been fired, and they're all being told that they have to liquidate their entire portfolios by 11 o'clock in the morning, which is in 3-4 hours. They had to get 93% of their portfolio out and up for settlement, walk out the door settlement deals today if you accomplish this feat, because we've got to get out before anybody else can get out. This is basically getting out versus getting in. And he knew, talking to them in the speech that he gave them, saying, this is what you have to do. And I know this will ruin many of your careers, because many of your trusted trading partners at all these other houses will never talk to you ever again because of what you're doing to them this morning. Because we're going to be the first house out. We're the first house to get out, because if we don't get out first now, we're under by this afternoon. We're out of business. We know by getting out and doing what we're going to do, other firms will go under as well. Brush of hate going forward. I'm asking the opposite. Are there hedge fund managers, presidents of brokerage firms, pension fund managers, hedge fund managers, ETF managers, who know that if they put in buy orders, think a number of firms are dealing with respect to GameStop being at $209 a share right now? If these folks came in here and just started buying up this stock and running it over the next 4 days to $450 a share, that they know by doing that, they will cause $100 billion in damage to their pals, their fellow trading firms. On the one hand, they could run them out of business. On the other hand, they could steal the business from them. On the other hand, they would be tarnished with, you're an assassin. But their argument could be, hey, I didn't cause the short problem. I didn't use my house money and fail to deliver shorts. I didn't sponsor or encourage or help clients write naked shorts up to the highest level you could ever imagine. We didn't create this $100 million share short position on GameStop. None of us, we didn't do it. We're fine, and we are perfectly allowed at any time. We're going to look after our clientele and do it, because we have customers who expect us to take advantage of weakness. That is the American way. That is the way of the market. Now, while I'm talking to you about all this, the stock's at 207 a share. So none of these guys are listening to me right at this second. Or if they are, they're writing things down and going, I got to talk to my buddy over at the other office. I got to write down what this Uncle Bruce is talking about. This guy's wacko. But you know, it kind of makes sense. You know, if we bought up 50 million shares of this stuff or 10 million shares, where's it coming from? How can we buy up, if 10 brokerage houses each buy 2 million shares each, 20 million shares of GameStop, legitimately buy it to go long, where's it coming from? There's only 70 million out there, 20 million held by management, 50 million held by the street. And the street isn't selling because look at the volume. There's no volume. So if we step in here and just start nibbling at it, others will nibble with us because, well, if you're buying, I'm buying. I mean, that's what brokers do. This thing starts to run. Everyone gets in to the run. They all want to get in on it. And all these shorters out there are just going, oh, God, there's a stampede of buying. We can't stop this thing. The tsunami wave that is coming in is followed by another tsunami wave, which is followed by another tsunami. And these are higher than the walls we've built to protect our little village here in Japan. We are going to be overrun by this buy wave beyond what we could ever imagine. And so going back to Wall Street bets, there are people down there going, this stock could go to $100,000 a share. This could go to $500,000 a share. And they're right. Technically, yep. Realistically, the company isn't worth 208 where it's trading right now. It's not worth it. I mean, if they sold all their assets, they wouldn't be worth $208. However, the company going into an e-commerce platform and priced than this, they I think could be worth at least what Chewy is worth. Chewy is 40 billion market cap, approximately 40 billion. This company at $200 a share is market capped at $14 billion. So yeah, this company could be worth 2.5 times as much more than it's worth right now if it just matched Chewy's valuation. Chewy doesn't make money. They don't have the sales GameStop has. They're growing. They're getting better. They're a really good executioner. They execute beautifully. I can't get the words out. They execute beautifully on their business plan. They really do. Pet owners love Chewy. Gamers are going to love GameStop. They will. Maybe right now they're saying, oh, I don't think so. That's that old little brick and mortar company. I don't love those guys. You watch, you wait. Watch what GameStop is going to do with their online presence. They're completely transforming this company. And within a year, the gamers are going to go, wow, these guys are like way better than they used to be. And in 2 years, the gamers out there are going to go, I go to GameStop every day to see what's going on. I've got to go there. It's Gamer Central. It's Gamer Central. That's where I'm going to go. Believe it or not, there are doubters out there who are laughing at me right now going, you're an idiot. You're an old man. You don't know. Okay, well, let's find out together because if these guys can only match the value of Chewy and become a $45 billion market cap company with 70 million shares actually outstanding, we're talking $600-700 a share. That's what we're talking about. And I'll bet you a year from now, Chewy will not be a $40 billion market cap company. Now, I think they'll be much bigger than that because I think they're about to turn into a profit center. And so Chewy goes to say 60 billion in value, let's suppose. Just guessing. This company becomes a $60 billion market cap company. We're at 900 a share now. It's 206 right now, 207 a share right now. If you buy it right now, and if there are big buyers coming in here, they will cause a short squeeze and a gamma squeeze and a failure to deliver squeeze, combine unprecedented numbers, unprecedented. Never before swaggin' thing that happened, and they'll be long lasting. This isn't going to be like a deal. No, this would be and then the company grows into the stock, except if the stock goes to 2,000 a share in the next month. Then no, the company will not be able to catch the stock in its actual. The company is 600, 800, maybe 1,000. I have guessed and I've speculated and I've wondered aloud if these guys in a year from now are perceived by the street as an e-commerce company and they've got 8 billion in sales on an e-commerce platform globally and they've reduced their store counts dramatically, which I think they will do all of this. It's a tall order. I know it's a tall order. But we've seen unbelievable things happen in the last year, like a pandemic that was supposed to wipe these guys out, and it didn't. 8 billion in sales online a year from now, a year and a half from now, valuating that company at 10 times sales, which wouldn't be unreasonable considering its growth prospects could be much, much higher beyond that. That's 1,100 a share. And I've said it, I've put it out there, and people have argued, and people have agreed, and others say, no, it's going even higher than that. Others say, no, it'll go at 6 times sales, not 10 times. Okay, but none of them say 205 is too much, 210 is too much, 215 is too much. They're all going, yeah, that could be higher. Now, right now, as I am speaking, the stock is under attack. It's now to 205.78. The question we have every day at this time, every day we go through this game, every day, are the shares being attacked because the shares right now are not on short sale restriction? So short sellers can attack any bid they find, any way they, as much as they want. They can hit anyone's bid and they can drop this thing. And are there hedge funds, are there shorters, are there brokers that want this thing to print under $100 a share? Do they want this thing dropping all day today so that the options holders of call options that are holding call options that were written by naked option writers will not exercise their stock? Because if you can get this stock down to $100 a share today, it's at 201 right now. They can get it to 100. That means only contracts from $5 a share to 100 a share are in the money. All the contracts that were in the money until last week when it went to 348 are not in the money. Only the contracts for the current price of the stock. It's now 203 a share. That's question number one. Question number two, is this stock under attack right now because it closed last night around the 210 ballpark? And if it can reach 190, roughly, it'll be a 10% drop during the day, and the stock will go into a short sale restriction for the balance of today and all day tomorrow, which is the witching hour day. So, folks, if you want to buy the dip, the first thing you want to do, put in buy orders at 192, 193, just ahead of the 190. Put in all kinds of limit orders there. They have to fill your order to get the 10% drop. It's number one. Number two, if they go through 190 and then they go down to 180, you know they're trying to take a run even lower. Now you can put in buy orders at 161, 151, 141, 130. You might get it, you might not. And you're just picking up paper the lower it goes, and you're putting it away. The more you buy and put away, the higher the stock will go later. When later? Tomorrow, Monday, Tuesday. It won't take long. The short, I don't know if they're going to be successful in even getting this thing down much below 190. I really don't know. Right now, volume on GameStop with this drop of $6 a share from the high of 218. It's now 203. It's $15 drop. 2.2 million shares of volume. Nothing. There's nothing trading. There is no sell wave coming in here. People out, they're not following them. There's no volume. There's no one trying to get out in a desperate way with millions of shares because there aren't any shares to be had. They've been shorted. The stock market is flooded with possibly hundreds of millions of GameStop shares, of which only 70 actually exist. And everyone who's me, other YouTubers, Reddit, the GameStop stock subreddit page, Wall Street Bets, we all know the game. We all know the gig. This isn't the first time it went from 20 to 500 in January. This isn't a repeat of that. There is an epic battle going on here between one force and another. And I'm speculating, and I know I am speculating with you guys that it is possible that there are some very large organizations who got caught with their hand in the cookie jar when this thing took off from 38.50 to 348 or whatever it was, and are now trying to put a stop to this. And they're going to risk their house money to do it. We're at 201 a share right now, and 199 right now. Just broke through 200 like butter, just went right through it. We drop this stock like I said before, to the 190 range-ish, 188, it will be a 10% drop. That is possibly a very good thing. Believe it or not, the first 10% could be good. After that, it's a war of will. Will buyers say, you know what, at 150, you want to offload it here? I'll buy all you got. I'll buy more than you want to sell me. Maybe that number is 138. Maybe that number is 99.50. I don't know. I'm just here observing with you what's going on. It's at 199 right now, down 4.7%. Not enough of a drop to institute a short sale restriction for today and for all of tomorrow. 198, 10 more dollars, and we're there. It's now down 5.3% right now on the day, and there is a war going on. It is big money, but the volume, 2.4 million. 2.4 million. I really wonder if the buyers are waiting. They're just going, no, hey, come on down here. We'll show some bids. Yeah, oh yeah, we got bids. But we're not going to show you millions of bids. We're not going to show you that we want millions of shares here. Not here. Oh no. We'll start getting interested around 195, 196. That's when we're interested, because now we got the 10% drop that we wanted. As easily as you can right now. We'll let you hit it. Come on, hit it, give it to us. But once this thing hits 196, 197, 195, there could be a 20 million buy wall there. Could be. I'm not saying there is. If I were running a multi-billion-dollar hedge fund, I would be the guy putting up that bid. Because now I got you guys. I got you guys again. We got you at 50. We got you at 120. We got you at 140 something. You played shenanigans after that. Now we're going to catch you again. And you guys are shorting down here. Watch this. Wait till it hits 400. You're down 200 a share from all the stock you're selling me today. Now, just come on. Give me your best shot. I'm waiting. I'm here. Sell me all the paper you don't have. Sell me paper you don't have, because you haven't got it. We know where it is. Hedge funds and mutual funds tell the SEC, we got 130 million of them. That's how many we got. I'm going, really? How can you have 130 million? There's only 70 million out there. Oh, it's magic. It's magical. We're in a magical place, because we've become Disneyland here at the New York Stock Exchange. It's magical. There's stock everywhere for everyone to enjoy. We're at 204 right now. Can't get the stock down. They can't get it down a measly 10%. They did get it under 200, 199 print. I saw it. I was here. I saw it. What's happening? What's going on? Do these shorters, do they have any idea what is about to befall them? Potentially. Is it a guarantee? Nope, no guarantee. Will this happen? This drop off today, tomorrow, Monday, Tuesday, or what the financials show? No matter what anyone is they're gonna have, because they're upside down $50 billion. That's why. Until they can buy back. But if people don't give them the stock at any price that they're trying to get it at, these guys are screwed. They keep shorting it to be able to buy more back, and they can't get it back because people aren't selling it at any price in any real way. It's just not coming in. And so you can't cover if you can't buy it. And eventually you have to start buying with everybody else. And now you've got to figure out, well, how much do we have to pay to get people to sell this stuff? I don't know. And at the same time, I'm asking you, do you think that they're buying call options in Chicago to offset their shorts and put the onus on those guys? Are they buying $50 calls, $60 calls, $80 calls? I don't know. I right now, if they're buying $50 calls right now, the cost of a $50 call that expires tomorrow or next Friday is 50 plus 155. It's a $205 stock. That contract is worth 155 book value plus premium till tomorrow, or premium till next Friday or the Friday after, and so on. These guys are paying more than 205 to get the stock, see, but they can't buy it at 205 because no one is giving it to them. There's stock trading at 205, but it's hundreds of shares, a couple of thousand. Millions? No, not millions. Where are the 200 million a share volume that we had in January at these prices? Not happening. This is so much fun to cover. 2.8 million shares traded so far, GameStop, in 36 minutes. There's nothing for sale. There's nothing for sale. You can manipulate it wherever you want, and the sellers will not give it to you. We know what the corporate deal is. That's how I see it. No, am I wrong? Some will say you're way off because you were saying to the market how great this stock was when it was 348, and now you're telling the world how great it is at 205. You're wrong. The market has proven you wrong. The market doesn't lie. True, the market doesn't lie. Over time, it doesn't lie. It can be manipulated, and if the SEC lets it be manipulated, so be it. The New York Stock Exchange lets a stock be manipulated, so be it. Was it manipulated when it went from 348 to $172 in 25 minutes with 5 trading halts? Yes, it was. It was being manipulated. Absolutely, it was. Were there 500 million shares for? No, I traded million shares, 500,000 shares. That was manipulated. It was selling on a machine gun level. Just sell. Whoever's buying it, just hit them with the stock. Don't wait for a buyer. Just hit it. This trading halt was done. Came back. Sell. Halt. Open. Sell. Halt. The sellers are going, okay, now we're going to get 50 million shares of panic selling coming in because look at how bad the stock is doing. And it went to 285 an hour later. Oops. It went the wrong direction. As soon as they stopped selling, it went up. What was it doing this morning in the pre-market? It was 220. It was going up. No selling, went to 220. Selling right now of 2-point-something million shares, 2.9 million, it's at 202. It's actually down $7 on the day, which is down $17 from the high of the pre-market. That's what it's doing. This is the pattern since last week. We're all familiar with this game. We've been on this roller coaster now. We know every ride, every corner, every dip. We know the ride. We can ride this thing with our blindfolds on. We know. But we also pretty well, most of us all know the big picture for this company is not a brick and mortar future. We know that, and we're prepared to buy it here. You want to give it to us at 204? We'll take it off you. We'll take it off you at 198. We'll take it off you at 196. We'll buy it at 191. There's buyers just going, yeah, I'll just keep buying. I keep getting stimulus money to buy this thing. I'll buy it. Yeah, I'm here. I'm here for years. I'm here. Yeah. Now, if it wants to go to $1,000 this afternoon, I might sell some. Okay, fair enough. But I'm here until it gets there. So if that takes years, okay. Takes weeks, okay. Doesn't matter. We're here. But you're not shaking us out. And a lot of these folks who own this stuff, they own it cash. They don't have margin accounts. So God help these guys. 205.35 right now is the stock price. 205 right now. Again, there is clearly, in my opinion, clearly someone trying to stop this market and interfere. This trading pattern here is clearly not normal, not natural. No, it's just not. It's not natural. But it's legal. The SEC won't stop it. 206 now on the stock, another dollar bump. Volume 3.1 million. A couple 100,000 just came through in a few minutes. 206.37. The seller, whoever the seller was, may have run out of gas when it hit 199. Just ran into a buy wave that just overpowered what they had left. And now there are people here kicking themselves going, shoot, I should have buy order in there 201, like Bruce said. Dang it. And now it's 205, 206. Darn it. Yeah, well, that's the market. That's how this game score the deal. Sometimes you don't move on a deal and it passes you by. That is going to happen. That is how this business works. Sometimes you're a buyer of a stock and you've got to wait for it to come to you. You can't just chase a stock because you're desperate to get in it. Sometimes you have to be a patient buyer and let it fluctuate to come to your direction. And maybe there are buyers at 196 on this stock, or buyers of other stock 5 and 10% below where they're trading at right now, waiting out sellers to come to them. That market does fluctuate, as evidenced by the New York Stock Exchange, which is now up 33 points on the day. And the S&P, which is still down 26, hasn't recovered. And NASDAQ, which is down 241 and hasn't recovered. That's how this market works. Sometimes shares go up, sometimes shares go down, sometimes some go up, sometimes some go down. That's what we got, a mixed day right now where people are going, what's going on? I'm not sure. What's your conviction? there you have it. Anyway, there you go. Peter, thank you for this donation. Very nice of you. Also, hey, Bruce, I'm no longer upside down on UPST. Thanks for talking me down yesterday. I love you. Glad to help, buddy. That's good news. Peter Green, we might need to wait for company news to drive the price up if we don't get enough upward buying momentum. They won't get margin call unless price shoots. Walls are great for holding share price, not increasing it. That's true. That's true. I mean, if there are firms out there who are gauging how big a problem certain houses have, certain investment entities have, they could be sitting here going, we're just going to bide our time and wait for them to make one last shot at this thing. And then we're just going to trap them. We've got the flank over here. We got the army flanked over here. They're coming up the middle. They're going to come right at us. And when they come in the middle, we'll just close in on them from behind and we'll just nail them. Just like at Antietam, just like at Gettysburg. We'll shut them down from the sides and from the other end. That's how we'll do this. The GameStop shares can only go down if one thing happens. Someone sells more stock fast. You gotta get them to. You gotta hit bids. Someone has to sell it to drop this market. Somebody. I don't know who that's going to be for sure, but there are firms out there who might be the ones. There could well be people going, yeah, we know they're coming. We know the army's just over there. We know they're there. They're all loaded up. They're polishing their nuts. Yeah, they're going to start. They're coming. We know, but we're here. And we've got troops over there. And we got armies and battalions over there. We got backup over there. And we got all the bullets we need. And we're ready for it. We got more ammo than they've got ammo. They don't think we have as much as we've got. They're in for a terrible surprise. That could be it. Professor Sora, way to go, man. Thank you. Also, Gregory, thank you for joining me. Those of you who've been joining this channel as members today, thank you, all of you. I really appreciate it. I'm just so focused on what's going on. I don't want to take up too much time thanking people today. Uncle Bruce, can you tell us anything about dark pools? From what I was reading, Robinhood was buying stock late from dark pools instead of the market. There's a possibility that a lot of the trading that was going on, where people were buying stock through Robinhood, as I was mentioning earlier in the show, people were putting in buy orders to buy stock, and Robinhood was honoring the sales, sending out confirmation. You got your fill. You wanted 2 shares, you got 2 shares. You wanted 2 shares at $128, you got them at $128. You wanted them you wanted to sell at $128.04, you're out at $128.04. They're filling orders, but the orders didn't make it to the exchange. The orders only went as far as Robinhood's computer system. Possibly, perhaps, maybe the orders only went from Robinhood to the Citadel system, to the other systems that they're using, whoever they're buying and selling to, the market makers. And they honored the trades internally without taking the order to the market. Because if they're small orders, they're inconsequential to go all the way to the New York Exchange. And so these market makers are handling these millions of little tiny orders all internally, all through their computer systems, and they're running up a tab as to their exposure. And if the shares are going higher and more people are buying and less are selling, they owe stock and they're unshorting stock. And so they're carrying this pool of a trading pool. It's like running their own little stock exchange on this one stock and only directing large orders to the New York Stock Exchange, 1,000 shares or more, 500 shares or more. I don't know the number. That could have been happening. Could it have gotten Robinhood into big trouble? Yes, it could have. Did Robinhood start to pare back this whole thing as quickly as they could when they realized just how out of control it was? Because when the stock hit $500 a share, could Robinhood have been short $10 billion worth of stock on paper? Yeah, they could have. I don't know if they were, but they could have been. Could have Fidelity been short? Could have Schwab been short? Could have all the brokers been short a ton of stock as it reached these unbelievable high levels that no one suspected on Wall Street was possible? And they put restrictions on the buy side. That is entirely possible. I understand. I still can't understand why a broker would not allow a customer to buy stock when they have cash. Wait, and only one reason why a firm would restrict a client from buying stock. They're on the other side and they're upside down so big that their firm is being threatened and they've got to come up with emergency cash. It's the only way only reason I can come up with. I haven't heard the opposite argument to that makes called the clearinghouses increased margin on the stock and we had to protect our client. Crap is crap. It's complete crap. No way. How can clients be in trouble if their shares are up $500 a share and they bought them at 10, they bought them at 20, they bought them at 200? How can was 3 days ago? I don't see the risk in your life. If you took a $2,000 account and it's now a $30,000 account, I don't see where you have a problem. I see where you have a wonderful day underway right now. It's been a good week. It's a great month. What a year. That's what I say. I don't know how a brokerage house went high. I just don't see that argument. And so I ask you, hey, what's going to happen? Right now, what's happening is the stock is at 207. And it is down 271 on the day only, where it was at 199 10 minutes ago. That's all. It was a lot worse looking on the day. They didn't get the 10% down dip. They didn't get the crash. Now, is it over? I don't know. I'm not sure. I can't tell you that. How can I possibly know? I'm just a guy in a living room in Creston asking people just try to like me. Try to hate me. I'm not hired by any brokerage. What I see and what I'm interpreting. Volume 3.4 million. 3.4 million. Oh my God, this is so thin. Unbelievable. I'm blown away by how little is trading with what has been going on here, apparently. Unbelievable. By the way, there are 7,100 of you here, so thank you for watching me this morning, being with me, spending some time. Your valuable time, very much appreciated. 2,000 thumbs ups today already. I haven't even asked for them. Thank you. Of course, I'm begging. Please keep them coming. 161 thumbs downs. You don't want me to be negative. You don't want me to be myself, or you think that I'm not being myself. You think I'm being somebody else, or I'm being paid to be somebody else. Well, I can only tell you that if you kind of stick around and watch me day in and day out, I think I'm kind of consistent with my approach. Love me or hate me, I'm just telling you where I see it and how I see it. Right now, I see the stock at 208.36 on GameStop. Now, our friends at AMC, how are they doing over here? 14.44. I'm so relieved to see 14.44. I am so happy. You may not believe me, but I am really, really happy that the shares are there. And I'm praying that they're going to go a lot higher. I really am, that they're going to just keep on going. AMC, please go to 17, 18, 19 bucks, please. Oh, that'd be great. I don't know, but they are at 14.43 and they've traded 43 million shares, which is light for this stock, but it is nonetheless 43 million shares of volume. Yay. Who's going to poo-poo that? Not me. High of the day, 14.54. Way to go, AMC. GameStop, 208.56 right now is where I see it. I'm not sure where we're headed next, but it looks to me like there seemed to have been a sell wave from the 220 range, roughly. We were there in the pre-market. We were at 217, 16 on the opening, kind of. 218 on the opening, and it came back to 210, kind of went up to 211, 12, down to 199, now at 209, and it's off fractionally 208.82. So it's just jumping around here. Sorry, let me just get this. There, it's down 99 cents, down just a tiny bit, but the volume is extremely light. And there's your Uncle Bruce trying to interpret what's going on for you. And I hope you don't mind how I'm doing it. You are awesome, Bruce. Me and my wife, we love you. Thank you, John. Your kind comments mean the world to me. I think should we be concerned with how the volume has dried up over this past week and today? I wouldn't be concerned about it. John, thank you for becoming a member. I wouldn't be concerned about this. No volume equals apes holding. Long live the apes. Yeah, people are not panicking out. You're not shaking them up. Even down to 199. We haven't been under 200 in what, a week and a half, 2 weeks? Got a 199 print. Where did the selling wave come from? It wasn't one. We didn't get one. We're now at 207, 208, 209. It just snapped right back. As soon as the seller ran out of bullets, and this was a small seller, 200,000 shares, I don't even know. I don't know. but it wasn't much. That seller got taken, they got purchased, they bought them, and now the street wants more, and there are no sellers to satisfy the demand to keep it at 199. It's now kind of 207, 208. That's where we're at. Like I said, is it possible that there could well be a firm out there that will take a run at this because they smell blood? Because that's how Wall Street is. It is merciless. Austin, thank you. Can you do the I want to rock thing again? Oh gosh, I'm so tired, Austin, I'm exhausted, man. It's Akos, thank you for becoming a member. I don't know if I can do it. I can hardly move. I'm telling you, I'm just an old man, you know. I don't know if I can tell you what I want to say to you, what you want me to tell you, but I just, come on. You got to come to me. I can't just come to you. I mean, I want to say in all sincerity, so that none of you miss this point, okay? You all get this the first time. I don't want to repeat myself, all right? I would like to say, I want to rock, okay? All right, did you get that? Okay, because I haven't got many left in me. It's been a long week here, and you gotta cut me a break, kids. Thanks for joining me. KW just posted on your Reddit chat a picture showing blatant manipulation, multiple orders of 59, forcing the price to stay at the 200 and 205 range. There you go. I'm not doing it. I'm not a shell. There's a subreddit page for Stock Market Bruce. I'm here. I'm working here. I'm yelling at my camera. I want to rock. I haven't got time to post this stuff. Independent viewers are posting it, and I thank you for it. Coffee 44, thank you. Welcome all of you. Welcome all of you. Thank you. Here, ionized follow. Bruce spitting mad truth this morning. Keep it up. That's. I'm trying not to spit, but I guess I get to do it. RH Robinhood said they had a liquidity issue, but not from me. They only let me buy what I can afford by depositing confirmed funds. How could I be the issue? Exactly. How could you be the problem if you've got cash? You're not the problem. You're the solution. Of now 211 on GameStop. If you are buying stock with cash, going long, you're the problem because they're selling even more to you. They're shorting perhaps against their clientele and got caught. Up $1.75 at 211 right now on the stock. Robert Hill, hi Bruce. Have you touched on the game at negative 207 ATM at the moment? Robert, I can't, at the risk of getting criticized by other YouTubers who analyze what I do to the nth degree, if I say I don't know exactly what that means, don't be mad at me, but I'll tell you right now, you'll be able to go online anytime you want on YouTube, and you'll find plenty of other YouTubers who will tell you how little I know, and I shouldn't be here. So, Robert, someone else will tell you how this works. Oh, I'm having fun here, you guys. Oh my gosh, I'm having so much fun. It is such a crazy world out there. Look, familiar with it. That's the beauty of this chat room. There are a lot of people who help other people out. So keep your eye open, Robert. You'll probably find someone who'll comment on your comment to help you figure out what's going on. Otherwise, you'll certainly be able to figure it out through doing Google inquiries. But you don't want to hear it from me if I don't understand it to the nth degree, because now I'm just wasting your time and I'm just blowing hot air, and I don't want to do that. I get accused of enough stuff by others. I don't want to give them more fodder. So I apologize for not being able to answer the question, but at least I'm trying to be honest with you, straight up with you. Jonathan, good morning, sir. I understand short sale restricted, but how is it implemented? Just a switch on a computer somewhere. That's simple at New York. I know that the New York Stock Exchange has gone very much computerized, of course. There are fewer traders on the floors these days. I'm not even sure how many people are on the floor for New York right now. I don't know if New York Exchange is allowed to have their regular contingent of people down there, because of course it's a New York State issue that we're talking about, right? It's New York State that will decide when and which businesses can have people where and what in what numbers. But this short sale restriction thing, this is routine stuff for New York. This is not complicated. This is not rocket science. It doesn't require 25 people to enact it. You don't need a special meeting. This it could be as simple as like that, and every house, every trading desk that is every firm that's a member of the exchange with their trading desks in their systems all get the alert. Boom, the alert, GameStop, and there's an asterisk beside the stock symbol, or there's something somewhere where someone's trying to enter a short sale, and it'll say restricted. You can't do that. Stock's on restricted list. Unable to execute the order at this time. Stock's on restricted list. Oh, then they all know. They'll all know in a microsecond that, oh, yeah, okay, we can. And the shorters know. The guys who want to short this, they know. They have the level 2. They have the level whatever. They have access to the to much more sophisticated trading systems than we can ever afford to get into. They all know as well. And so it's all a done deal. But it's not in effect. I don't think it's in effect today because it didn't drop yesterday by more than 10% during the day. And it hasn't done it today. So I think we're on a wide open. Anyone can short this any way they want. I think that's what's going on here. Am I wrong? Can someone help me out? I am kind of tired, and it's been a long time. Oh my gosh. There's nothing wrong with not knowing. Well, that's what I used to think. When you're honest with your viewers, I used to think that was a good thing. But apparently, I get a lot of thumbs downs from people.
Let's see what we got. It'll be a little faster. Number one, the firm announced a net loss of 64 million Canadian. Okay, gotcha. That was an improvement on both a quarter-to-quarter and year-over-year basis. Comparative respective losses were this, okay? Net cannabis revenue of 13.9 million was up 8% sequentially, but down more than 5% year-over-year. That's not so good. The results showed adjusted earnings before, EBITDA, 5.6. Company said average gross selling price per gram was actually lower. Okay, so this is actually interesting. This is a potential concern is the amount of how do we say it? Competition that we're potentially getting in the cannabis industry, right? If cost per gram comes down, that starts affecting margin. Let's see. Sundial anticipates continued downward price pressure throughout the industry in the coming year due to continuing competition and relative oversupply. Wow. Talking about an oversupply and potentially in the cannabis market. Oh, speaking of which, look at this.
Plenty of other ones that have unique and interesting effects around sleep or pain or mood that could be safe alternatives as we invest as a country and as a society in figuring out what's going on. So we're bullish on all of that. In the meantime, we're going to create safe, consistent, branded consumer products for Americans to consume and offer well-being. We think the hook is with the brand, and whether it's Bebo or Rhythm or Dog Walkers or Can, we can win.
All right. Well, Ben, thanks for joining us today.
Thank you.
Yeah, I see a comment here. Somebody saying financials matter very little to me for weed stocks. I'm mainly interested in who's going to be ready when legalization hits the entire North American continent. Yeah, and I agree. I think that's happening. The problem or the danger here is it's a little bit like biotech, right? Where you're making these bets on, okay, are we going to get FDA approval or not? Are we going to get into the U.S. market or not when that legalization comes? And when is that coming? And anytime I feel like we're waiting on government regulation, it feels like we're throwing darts, basically. It's kind of like, oh, yeah, we think they're going to do really well. We think they're going to do really well. And usually, if you're going to do that, it almost feels like you should just have a nice little basket of these stocks. Like if you had, a cannabis ETF, or you picked your favorite 10, then even one winner. But that is interesting about a potential oversupply in the cannabis market. Something to consider if you're playing weed stocks is oversupply considerations, which to me does make Clever very interesting, because Clever plays at the lower prices, certainly for extracts, because they're growing in South America rather than in Canada, where the prices are a little bit higher. All right, so JP Morgan actually up, 1.6. Look at this rise in JP Morgan right here. Yeah, there you go, Clever, exactly. MJ as an ETF is the best way to go. I don't blame that at all. You pick your favorite 10 or something like that. It's good. But yeah, look at these runs over here. Even around Volkswagen, Sundial actually, up 6% on that earnings. It could be just as it kind of falls into the spotlight again. We see a run, cooling off that near 70% at Upstart. We do have Lemonade, Twilio, Workhorse, Nokia, Pinterest, all these guys really suffering here. To me, this is really where I want to be shopping. It's very contrarian though, right? You get a lot of, why would you buy when it's red? No, throw the money after the winners. No. It's the wrong psychology. Or it's not, I shouldn't say it's wrong. It's just not the psychology I follow. I like going shopping where the pain is. I'm gonna go shopping where the blood is. Like this.
Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go. Come on, push it. Find the dip.
Oh, I love it. So good. But yeah, lots of that red. Wayfair doing exceptionally well today, though. 4% on Wayfair. Ford, GM, these guys trying to maybe catch up a little bit after the craziness that we've seen at Wagon. Jumping on over to, let's see, Bloomberg here for a moment. Let's see what they're talking about. U.S. and China begin to talk.
Yet, clearly, these top two diplomats who are flying from Beijing to Anchorage for this meeting, they wanted, as Jenny said at the beginning of her piece, to get out of this meeting specific process, process that a strategic dialogue would restart.
All right. So somebody says Dollar General is bleeding. I don't really care right now about the specific dialogue we're going to see in China between the Biden administration and China. I think they're going to be just fine. So Dollar General, I'm pretty sure, reported. Today was the day they were going to report. Let's see. Dollar General. All right. Come on. Dollar General. Here we go. Okay. Dollar General. Individual company news. Let's see what we got at Dollar Gen. So, general forecast for 2021 decline. Okay. Dollar General tumbles on Q4 earnings. Not a huge surprise, mostly because Dollar General was a big play during the start of the pandemic, when it's like, oh my gosh, we got to hoard all the possible cash that we can. And Dollar General was a really good opportunity for that. But now we're kind of trending away from that, I believe. But it also looks like there was an earnings miss. So let's see if we can pull that. I like it when I can get it on the news list here. So let's pull up the Launchpad. Let's see if we can find what happened here. Okay. Here we go. Okay. Dollar General announces retirement of vice president. Here we go. Earnings per share of $2.68 for Q4. Capital expenditures of around $1 billion in 2021. Q4 sales. What? Hold on a second. Okay, here. The earnings per share for 2021 that they're forecasting is going to be $8.80 to $9.